15 p.m. Eastern, and we're here with another edition of Chart the Markets. My name is Mark from BluntHouse Technical Analysis, and it's not like we don't have anything to talk about yet again. As you have been well aware, these markets have gone a little bit bonkers, and that elastic that we've been talking about that keeps stretching, and just when you think it couldn't stretch anymore, it seems to stretch that little bit extra and then snaps back. And that volatility is fun and profitable if you can tame it, but taming the beast is sometimes an easy say and a hard do. But one of the things I wanted to talk about today is what I'm calling just training yourself to lose. And in many respects, I think we've all been there in some way. And this forum is just as much a classroom and a place for us to share our experiences. And sometimes out of a desire to learn, make an extra buck, absorb information, we get to the point where we keep making the same mistakes over and over and over again. And essentially, that repetition creates, think of it like a muscle memory. You do that same thing over and over and over again, and you've essentially trained yourself to lose. And you start repeating that behavior and repeating that behavior. And the longer it goes on, the harder it is to try and correct. Right? You have to find a way to ignite that rational person inside that says, hey, this isn't working anymore. I can't keep doing this and ending up right back where I started. Or whatever the scenario is. And that is on us, right? That part is on ourselves. We can't blame anybody else for any of that other than ourselves. And all we can do is to try and train ourselves in a way, or get the training to help us create good habits. Like, if you think that being a trader is like being a fighter pilot and it's that exciting or something, you're kidding yourself. It's just not. It's not meant to be that. Your daily life doing this, or whenever you engage, is not going to be a segment out of The Big Short or Margin Call. You don't want it to be that exciting. What you want to do is train yourself with good habits so you don't have to worry about those things. But that starts with us. It starts with all of you. Stop repeating the things that don't work. Just stop it. And if you're saying to yourself, well, then now what do I do? Because I really don't understand any other way to do it. Well, then stop again. And take the time to give yourself your own edge. And that own edge is self-possessed knowledge. That's the stuff we talked about the other day, where you can sit down at your screens. You don't need anyone else's opinion or anyone else's insight on what to trade or how to trade it, or where to enter and where to exit, because you have your own strategy and execution plan. That's yours and yours alone. Build it. Use what you might learn here or from others. Build what works for you. But stop immediately what doesn't work anymore at all. And I'll give you an example. If you find you're trading with leverage and getting liquidated, then what is it that's causing this to happen, other than the fact that you can't manage the time frame and the margin? Well, right away you got to be saying to yourself, I got to stretch it out. Drop the lev, extend the time frames. Stop doing the things that don't work right away. because as you've probably noticed, there's not a lot of second chances in this. You don't get to, respawn like in Call of Duty or something. That's not how this works. You only have so much to work with, and you have to protect what you have. And what we want to do is just give you the simple tools that you can use on a daily basis, on any time frame, on any asset, in any market, to monetize the chart. I hope this repetitive beating over the head of very simple things eventually sinks in, because this is going to be as simple or as complicated as we sometimes make it as individuals. And it's following the chart, doing what we're told, understanding the basic rules that we use to develop to find an entry and then execute our trade. And I probably, if I was ever going to create a textbook, I think this Dow Jones chart would be in it. And that green vertical line that you see on the right side of the chart is the 4-hour sell signal. And I know we showed this chart earlier in the week, but I think it's worthwhile showing again. That would have been Tuesday's candle, right? And here we are today. Does that not look kind of like a toppy sell signal, right? That doji at the top of a move higher. Anyways, I digress. There's our 4-hour sell signal. Do you remember this level down here, what this was for? Why did we draw this simple horizontal line? It's because we were identifying, just roughly, a structural level, kind of connecting these tops here with these bottoms, right? Kind of where you can slip the ruler in there and create a level of support and resistance. Now, we did that when price was way up top. But we did it because we said, you know what? That's a structural level. Let's keep our eye on that. It might tell us something. We know instinctively that breaking structural levels to the downside is usually problematic. Breaking them to the upside, usually exciting. But what we're doing right now is just identifying that level. That's all we did up here. So we got our 4-hour sell signal. And again, we're just following the chart. And I'm just showing you the daily time frame, but I've identified that's when it fired. Right? So there goes our 4-hour, and that's the 12th of February. Then on the 19th of February, your daily signal, as you can see there, it fires. Now, even though you had those 3 candles that you see to the left of the candle with the sell, didn't break trend. So you have your entry on the 4-hour, that's early, and those 3 green candles didn't shake you out, because as soon as you're on that 4-hour, remember, it's the on-ramp. That 4-hour is the on-ramp onto or off of the daily. So your 4-hour entry was good, and on the daily chart, this move where your signal fired didn't break, right? Nothing broke yet. It's not like these 3 green candles created, an equal high up here, and then we'd be talking about double top. That's not what happened, right? You got a sneaky entry. This didn't shake you out, and then all of a sudden, hey, there's your daily sell signal. So there's where your confluence starts to come in, right? We have a nice comfortable entry on the 4-hour. We didn't get shaken out of our trade. There was no reason to consider that. Now we get the day. We're looking at the daily because we use multiple time frames. Fractal analysis. It's basically what this is. So there's our daily sell signal. Oh no, the next candle was green. But it didn't change trend, did it? No. But what can you tell? I hope you can see this. If you look to the right in here, you'll see the T-line and the 5 EMA. What you knew is that the trend was still down. Here's your sell signal. That's your confirmation on the daily. And you can see that this is open and diverged down to the right. There's your next candle. And there's your weekly sell signal. So all this was in here. You know, at one time, this would have been a pretty substantial green candle, and it would have probably got a lot of you to jump and maybe try and cheat. But this is why you wait for confirmation. You're in up here. Here's your daily sell. There's your confluence. Trend never broke. This is just volatility. This is the elastic snapping around, right? This ends up being a failed breakout. That's what this ends up being. Come back down, take out the previous wave's lows. And lo and behold, even through here, as that elastic that we're talking about is whipping all over the place, the trend was still down. Now these green candles that you see, what are they? They are simply green candles in a downtrend. That's all they are. Wick the T line on this candle and pull back. Wick the 5 EMA and close. Still underneath it. When you're trading on the south side of the T line and 5 EMA, which we use as a filter, fibs, fractals, filters. This is our filter. When you're trading on the south side of that level, you don't take longs, because we know the trend is down, right? And you don't want to fight the trend. Hey, what's that? Is that what are you talking? To the penny? You're kidding. Yeah, to the penny. Now, this isn't pin the tail on the donkey. This is just really luck more than anything else, but that's the level. Right? And we just drop this on here again. We're connecting, just slipping that ruler between those support and resistance levels. And yeah, we dropped it in up here. And we do that on a lot of our charts, just to identify these areas of structure. Now, for a lot of the world, they're trying to, maybe we wait and see what goes on to see if we break this level. Well, all I know is that when you see this, you can pontificate all you want. The market's telling you what's happening. When you're diverged down and to the right, you stay short. Up and to the right, that's a long. You don't take longs here. You don't take shorts in here. Now, here we are at close. We wicked our level. You know, had a little bit of a heartbeat towards the, in the later afternoon. But this is still very, very bearish. Now, what you're hoping for is some sort of a snapback. You know, we're hoping for that elastic to snap back and kind of create some activity the other way. But as long as this is diverged down and to the right, now this is obviously a hot candle. And when I say hot candle, there is a lot of momentum and velocity in this move down, and it's created a little bit of a gap here. And this is where a lot of traders have problems, because they'll instantly identify this. Oh, that's the bottom. Has to be. Well, it doesn't have to be anything, right? That could have been the bottom too, but it wasn't. Right? We don't know what the next candle brings. We just have a handful of things that we can do to try and interpret what the chart's telling us in a very simple way. So this is still bearish. Literally hit our level to the penny. It has to find, as a snapback, I would hope that it would try and test the 5 EMA, or, do something like this even. Give us something. But just because you test it doesn't mean you break it, as you can see. There's another example. You close, you test those two levels again. Where do you close? Below the 5. Now, all we're doing is using Just layer. Remember when? Oh, maybe some of you don't, but you remember when you had the acetates on the screen, and you would just your teacher would kind of layer on one thing over another over another to try and demonstrate how something was built, or to try and build a case in point. Well, that's all we're doing. We're just layering on some tools that we have. So there's my 4-hour. On the 4-hour chart, there's your 4-hour sell signal. 4-hour chart, there's your daily sell signal. 4-hour chart, there's your weekly sell signal. Now on the 4-hour, yeah, you get a little choppy in here. But once you're in and ahead on the trade and your stop is set, and you probably have a trailer set, you're looking at these 3 time frames, the daily, the weekly, 4-hour, daily, and weekly. Because what you're trying to ensure is that the confluence is in place. And obviously, it is. Here's our weekly now. And you were in way up here. Now, it's, we don't want to make it about picking tops and bottoms, but what we have the ability to do is to stage your way into confluence. When we take this 4-hour signal here, as far as we know at the time, this is just going to be a trade, right? We could be in this thing for a handful of candles, or if we're lucky, 2 handful of candles. And you'd be happy with that, more than. But what we're looking for is, okay, I got a good entry. This is the safe entry on this time frame. And what I really want is for it to find its way, again, use that on-ramp, onto the daily. And then it rolls on to the weekly. By that point, that's when you have your runner. But how do you know if this is going to stick? Well, instead of just racing between, if you were using that 4-hour chart as an entry to get onto the daily, what the hell are you doing looking at the 5-minute or the 15-minute? It's completely irrelevant at that point. And I think what you're trying to do is just see something so early that it might save the day, or something to that effect. And I'm just going to throw on this chart quite quickly a set of MAs. What we're looking at is the 20, the 50, the purple is the 100, the red's the 200. We know that when we break one level, we find the next level. Now, this is obviously our entry on the 4-hour chart. We end up, which is fantastic, we got an early entry. The candle that produces the signal on the daily is one that breaks the 20. Because when you're trading above the 20, above the 50, above the 100, above the 200, if you're trading above all of your support, at some point in time, you're going to come back and check that 20 MA. And not every time is it going to hold. And then you're doing the same thing with the next level. So what happened here? We failed the 20 ultimately, didn't we? And when we failed the 20, break one level, find the next, what did we find? The 50. Just like we would expect. What happened up here? We reject. This is the first attempt up here of the 20. Since you break it, first attempts have a higher probability of failure. But what else can we determine here is that because what we're using as a filter is still open, down and to the right, and you're operating under the existing sell signal, you haven't broken trend. So at one point, this is going to be a healthy green candle, right? Well, boom, it gets rejected, comes right back to the 50. And did you know it was going to hold here? Because, that's really what we're testing, right? This is supposed to be a support level. This was resistance, and it obviously didn't like it, and it brought us right back down to the 50. If you're looking at this chart right now, you can again see the T line and the 5 EMA are diverged downward and they're open as they're approaching a major moving average. And as a result, what's happening is that there's so much momentum there that price can't grip that level and it breaks, right? So when you see you're approaching the 20 here and you're open down and to the right, and this is really when it's starting to get kicked off on the daily, open as it approaches the 20, it doesn't hold. So you can see this channel is still diverged down and to the right. You have a little bit of a few upward candles, right? But nothing goes straight up and down. You have to anticipate those things. What you're looking for is the next level. Don't get stuck in the thick of thin things, looking at every damn candle on every damn time frame, trying to figure out if the market's changing direction on you. You have absolutely thrown yourself into a blender. Just chill. You either took this sell, you took that sell, doesn't matter. You're just looking for confluence. Oh, a little bit of elasticity in the market that we're talking about? Fine. Expected. Did it get the rejection that you would anticipate? Yes. Did it get the did it return back to the level that you would expect, the 50? Yes. Did it hold? No, we knew it wasn't going to. Highly unlikely. So now we're looking for what? The next level down. Are we diverged down and to the right as we approach the 100 MA? Yes. Did price hold there? No. Did these 3 green candles just like literally kiss the 5 EMA and fade? Yeah. It's not that hard. Oh, here we are at the 200. Are you like this? See this? You knew this was not going to hold. And lo and behold, here you are right at the structural level that we identified previously. Now, what's the point of all of this? Well, the point of all of this is getting you in up here and then getting you to block out all the other noise that you hear on a daily basis about what is going to happen next. And to stop looking at each individual little candle on teeny-weeny time frames, thinking that it's going to make a difference. Right? You're never going to figure out what's going on the daily by what you see on the 5-minute, not in any consistent way, because it's too noisy, right? There's something bigger going on. Now, if this was a 4-hour chart, which we've seen millions of them that look like this, it kind of demonstrates that everything is fractal. What you'll see on one time, you'll see on another. Is this choppy consolidation? Yeah. Do we want to trade that? No. What we're looking for are the breakouts and the breakdowns. That's what we're doing. Again, more chop. What we're looking for is when we come out of it and the direction that we take. And if you're looking at the 5-minute at each and every candle, but yet you entered on a 4-hour chart, this is an insignificant time frame. If you want to catch the runner, just follow what the market's telling you. That's it. We're right back to where we would expect to be here. This is a 4-hour chart of the Dow. How did we close at the end of the day on the last 4-hour candle? Well, we wicked the 5 and we pulled back to close again well below it. Now, what do we see when we have impulse downs, right? Just let this set up here. I'm going to switch charts on you. 1 second. I'm going to go to Bitcoin for a moment because, again, the elastic has been swinging back and forth on it too. And we'll catch up in 1 sec to that other point because we're going to see it. Remember how everybody wanted the long in here and we kept saying, wait. Well, hopefully glad you waited, right? Impulse down. right here. And then you go sideways. When you see this impulse down and then sideways price action, it isn't bullish. It's more bearish, at least in my experience. And what's happening, I believe, is that you have this impulse in price to the downside, and because price isn't strong enough to reverse itself, it basically hangs around and waits for the average's time, quote unquote, to catch up. And then as soon as it does, the downtrend continues. And this gets too many people all the time. It just does. And as you noticed here, all this, test and fail stuff, well, what are we doing here? Test and fail. This is Tuesday's candle. If we go back to Tuesday's stream, what were we talking about? Don't sell the farm to long this. This is why. This is a trade, but I don't think it's going to change much. Now, is this, if you entered on off our 4 hour, you'd probably be down somewhere in here, which is great. And this is a nice trade. But you knew this 1,000-day moving average was here. You knew the 50 was here. You knew the 20 was here. And this is the back test that we talked about on Tuesday. Don't be surprised if you back test the 50. And that's exactly what we've done. We have not yet printed a sell signal on the daily, right? But if we go to the 4 hour, it's going to look different. Your sell signal's way up here. So if you're just doing your thing, trading the, trading the waves, avoiding the chop, this on the 4 hour chart was actually a nice trade. But it wasn't the long of your life. Accept it for what it is. And this is where a lot of people are training themselves to lose. Because you just can't let go of the fact that when something wants to go the other way, that you need to adjust your strategy. Because stop hanging on. Right? You are not the road runner, and you're not going to catch your pants on the branch sticking out of the mountain. And that's basically what you're hoping for here. This is a language. The chart is telling you what price is doing. We only care about what price does. We don't give a rat's ass what people say. We only care about what price does. So here we are. Buy signal. That's a nice 4 hour trade. You get a little toppy. And if you haven't checked yourself out already, and we're going to get to that in a minute, but I mean, here you can see you're starting to go sideways. Makes reasonable sense that you might want to get out, but if you needed some convincing, there's your sell signal. And now this is a short. And now you've broken the one level, looking for the next level, which you find. And just like we showed you on the Dow, are these two things open, diverge down and to the right, operating under a sell as you approach a major moving average? Yes. Did it hold? No. Why? Because there's too much momentum. You broke one level. Did you find the next level? Yep. Yep, you did. You found the 20. Or sorry, the 200 and you bounce. But have we broken trend? No. Because all we've done is wick the T-line and pull back. So this 4 hour chart, maybe this is, one wave down, 2, 3, 4 green candles is a retracement that don't break trend, and then what happens is you have that failed breakout that comes back to take out these previous waves lows on this time frame, and in doing so, we'll probably break the 200 again. And you've already done it here, so this is interesting. Now, because everything is fractal, and the type of setup that you see on one time frame you'll see on another. Does it look familiar? This is the weekly. Same kind of thing. And I'm not showing you this because I'm saying Bitcoin did this 16 months ago on a Tuesday. Who gives a shit? Like, please, come on. Give your head a shake, dude. Really. Stop. Before you convince somebody else that you actually know what you're doing. That's nonsense. The chart's telling us everything we need to know. We're looking at the 4-hour, we're looking at the daily, we're looking at the weekly. Right? And we tried to warn over the last few weeks and leading up to this, this is the impulse down, this is the sideways movement, this is the chicken shit test of the T-line that fails. Fail breakout on the way. Except this time, we're looking at the weekly. Do you want to come back, take out the previous wave's lows and challenge the 200? Because isn't the 200 our most basic bull-bear indicator? Yeah. And you break the 200 to the downside, well, and start trading below it with meaning, you're bearish. Right? And that's not what people want right now. But in here, we don't care because we're indifferent to price. You want to stop driving yourself crazy and stop training yourself to lose? Then become indifferent to price. You don't care if price goes up. You don't care if price goes down because you can trade it either way. Just as safely each and every time. Now, we talk about the management part, right? The taking what's yours in all of this nonsense. Whoops. And I just want to bring up the trade management element of our script so that you can see, and I know I was showing this chart, some of you I was showing this chart early in the day, some of you are going to look at it and go, I have seen that today. Well, that's because it's worthwhile looking at twice. What you're seeing on the screen is our script minus all the MAs. The sell signals that you're seeing, or buy signals, are being shown with a 5% stop loss. And then a 30, 60, and 100% take profit levels in stages. So how you manage that would be entirely up to you. But having some structure around your trading is really important. But the point is this. When you see this laid out on your screen, you have to acknowledge that it's very difficult to lose money. And you have to be saying to yourself, how am I not making money? How am I, getting stopped out, liquidated, chickened out, whatever. Doesn't matter. It's because you're not focused. You have to stay focused on, again, if you entered on the 4-hour chart, why are you looking at the 5-minute chart on this red candle? This 4-hour candle that's red, if you're looking at the 5-minute, will convince you that we've gone to DEFCON 5. Stop the BS. If you're over 18 and you're an adult and you're doing this, understand something. You have to grow up and expect adult things. And if you treat it like a child, it'll treat you like a child. And I'm not saying we're children or anything like that. I'm just saying you have to be professional when you do this. Being professional, being system-based and rules-based is part of the risk mitigation process. Not doing any of that is the kiss of death. Training yourself to fail. That's what you're doing. And I'm showing this chart because, I'm going back to the 2nd of March on this screen. And here's this monster candle here triggered a buy signal. That's your 5% stop loss level. And there's a monster wick on this candle as well. And guess what? Didn't get stopped out. And literally in one 4-hour candle, you made all your money. And again, you can take 33% at 30%, 33% at however you want to do it. That's up to you. But what else do we know about this chart? about this particular setup right here. Even though that elastic band is stretching back and forth, in and out, what do we know about the trend here? Blow this up a little bit. The trend is totally fine, right? Even these 5 red candles didn't break the uptrend. So once you hit all your take profit levels, you're checked out anyways. You see the 5 red candles, and then all of a sudden this green candle shows up and you realize that you never broke trend in the first place. And guess what? You can re-enter. And you'd be totally fine. But you'd do that with the confidence of knowing that the trend was still up. And again, I think you would have hit all your levels. Here you get a sell signal on this time frame, on the 4-hour. There's your 5% stop loss. There's your entry candle that never triggered your stop. 30, 60, 100. And again, was there still more there? Sure, right? But this is the systematic approach. This is the approach that's guaranteeing you the churn on your money. And you're not looking at every little minutia to try and determine if something's changing. Focus on what's in front of you. The chart's telling you. Like, I'm sorry, but it is. Impulse down, sideways, correct? What happens? Can't break the T-line, can't break the 5 EMA at all. And what happens? The trend down continues. Okay, now you get a buy signal. There's your 5%. Not stopped. 1, 2, all 3 levels. Like, I don't know what else to say. And even in this stuff in here, again, this trend never changed. Right? The trend never changed. So as this was unfolding, right? So there's you hit your level up here and you're good. So now you're waiting to see what comes next. And when you see this, you're like, guess what? Boom, this is a bounce. And off you go. Probably do it all over again. Here's your sell. What happens in here? You'll get stopped out. So this is an example of one that didn't go anywhere. That was your stop level on your entry. You never hit your first level, and then price reversed. So you either would have been taken out by this stop level or by your trailer. Most likely this one. Now, if you used $100, and again, remember, this is at 20% leverage, you lost a little bit of money, but not a lot of money. There's a difference between a little loss and a massive loss. And you don't want the massive losses. There's a private trader guy by the name of Ed Seykota, and he used to say, and probably still does, that if you can't take a small loss, then you will have to take the mother of all losses. And he's not wrong. And as I say that, you're all kind of probably nodding your head because it's happened. Right? We know that it happens. Another example though, so this one you would have got stopped out in. Here's your buy signal, and boom, you actually tag all 3 again. There's your sell signal, and this is where we just talked about. There's your next sell, and you hit all again. And it's just kind of rinse, repeat, rinse, repeat, rinse, repeat. Now, as we're now out of this trade, right, because you've hit all your levels, all your take profit levels, what are you going to do? Are you going to, take the dog for a walk, go fishing, bake a cake? I don't know. Or you're going to wait to see if this looks like what it may, and that's that little arcing failed breakout thing. That's option 1. Option 2 is tomorrow or the next day it starts to get a heartbeat and break above this level, firing another signal and setting forth a whole new level of take profit targets, right? We have three choices: up, down, or sideways. That's it. Up, down, or sideways. So if this fails and you come down and you take out this level, you have the point of control down here as a target. And again, if you start layering on your MAs, they're also giving you those targets. Oops. So you broke the 50. We wicked the 200 on the 4 hour. You broke the 20. Just see what I mean? Break one level, find the next. We know we don't want to have this fail and come back and take out that low, but it's possible. Right? We don't know what happens after each candle. We have to wait and see. Is all we can do is work with what we have. We see that divergence open, and of course that tells us that the downtrend is still intact, so we're okay. Now, this 4 hour chart, what do we really like about this trend here, higher? What it did for us, and so what we're using here is our Z-score suite and dashboard, and this is our script. The Z-score is showing us relative strength. That's what it's showing us. So we're coming out of this downtrend, and we've had no relative strength for ages, right? All of a sudden, we get a buy signal and a break of that 0 level on our Z-score dashboard. That is a strong assurance that I'm on the right side of it. And what's that going to look like? It's, if I can show this here, you're going to kind of see it like so, right? And you can see that green above the 0 level start to get dominant. And you'll notice that as price even bounces around and goes sideways here, you don't break that 0 level on the dashboard. So obviously price moves around. It doesn't stagnate, right? It does move up and down. But what we're being assured of here is that we have that relative strength support, which is really key in helping this leg. So any indecision that you see in here, I look at when I see that, and now I use the dashboard as a little bit of a support system. I see that I still have relative strength, so it gives me some confidence that maybe the move is going to be okay. And when do I get concerned about it? Well, over here. And this is when you go short, and this is basically the same example but in reverse. So we can see our relative strength fading. Here we break 0, and then we create a sell signal on that following candle. This candle actually closed below the T line and the 5 EMA when it broke, but this is the candle that gave us our confirmation on the 4 hour. And without any relative strength, you can see how difficult it is for price to move in the direction higher. And as all you did, impulse down, sideways, back to this level, and the drill. So if you're, for those of you that are using this dashboard, I know that it's helping you because you're telling me, giving you the assurance that you're on the significant right side of something. Okay? What I want to show now is, quite quickly, I'm going to go to DXY, which is the US dollar index. Here we go. Yeah, let's go to the daily. So, not unlike, Bitcoin or the Dow or anything else, we can use the same rationale of the 4 hour chart with Forex, for lack of a better, right? You can use it on anything. But here we are with the XY. So when did the dollar start looking like it was moving higher? Well, on the 4 hour, again, you're a little choppy in here, but nice big green candle, right? And look, see, break of the 0 level on the Z-score. That's what I want, right? This is helping me So what I'm doing is I'm actually filtering out a lot of trades. So I'm probably making less trades because I'm using this. But the trades that I'm not making were the ones that I probably didn't want to make anyways in the end. Right? So I'm filtering out a little bit of that. Right? So when I see my signal and I see this kind of break all of a sudden, hey, that's good news, right? And then you start moving higher. Now this is our daily signal. Right? So now what's happened here, you've got on the daily chart a buy signal firing. And there is our weekly signal firing. Now, is this a lot of chop? Sure, I get it. But let's look at the daily to see what this actually looks like. Now, the white horizontal lines that you see are the ranges and levels that we've had on this chart forever. And the intention is to trap price in a range. And I think we can say with confidence that we've done that, right? So this kind of 100 spot 2 level, again, what are we doing? Just connecting those levels like we did on all these other charts, doing the same at the bottom here, because current price revisits past price. So if you were longing this thing, there's your entry on the 4-hour, there's your entry on the daily, and here's your entry on the weekly. So all of that sideways stuff that looked kind of crazy, that's this. But the takeaway is that the divergence here was pretty pronounced, so you knew that this uptrend was good, even though you were going sideways. So you basically had an impulse up and then you kind of come back. This is the other thing, and now in reverse to the upside, you come back to the T line and or the 5 EMA and you pop again. You do the same sideways stuff here, come back, pop again. Now you haven't printed on the daily anyways a sell signal, but I would pretty sure on the 4-hour, yeah, there it goes, we would have. And this looks, you can kind of see, it doesn't want to go higher than here, at least for now. It's a pretty obvious level of resistance. So what we showed on Bitcoin, you can use on DXY, you can use on the Dow. And it is just a simple way to stay out of the weeds and keep your head clear. Right? Now, we layer on everything like, what do you think price is looking for? It's looking for the 20. That's all. Right? Simple or as complicated as that. And if it doesn't hold the 20, it's going to look for the 50. And guess what? If it doesn't hold that, it's going to look for the 200. Actually, in this case, might find it first. Now, this should be a lot of support, right? To have on the way down the 50 and the 200 in here. You would hope so. But if you fail it, you know where you're going. Just going to look for the next level down. And they'll show themselves. They can run, but they can't hide. Right? Current price will look for past price. If you don't hold the 50 and you fail, this probably is actually one big failed breakout and you come back down, if that was to occur. But as long as you have relative strength here, although this is a big red candle, I am slightly more confident that this might not be a total melt. So it's a wait and see game, but what's the takeaway is the 4-hour, daily, and weekly signals. This is confluence to the upside now. This is what you need in order to feel confident that you're moving in the right direction and you're on the right side of the trade. Right? And I stress the right side of the trade part. So you're in down here, you're going long in so early that even if there was a little pullback, you can breathe. Relative strength, yep. Notice the divergence up and to the right, breaking the 50, breaking the 200, breaking the 100. And you can see how, this should have been resistance, right? Didn't really put up much of a fight because it couldn't, because the momentum was too strong. And you knew that. So you could feel confident that even though you were banging your head on the 50, right in here on the daily, the T-line and 5 EMA stayed diverged. It wouldn't be problematic until it broke down. But it didn't, right? The market was telling you that you're going to be okay. And it's just today's candle that looks a little weird. And this, correct me if I'm wrong, but I think this happened mostly at the end of the day. There was a little bit of drama. So where does that leave things like gold? Oops. Let's see. Gold and silver, right? Everybody wants to talk about gold and silver. Here's silver. Let's look at that real quick. And I'm going to take off these averages. And on this chart, our daily, we have fibs. Right? Because we base what we do off of fibs, fractals, and filters. Right? And we can argue all day long, you know, should we have taken down here, should we have taken down here? Like, you know, ultimately, it doesn't really matter. But I drew them on the weekly chart, and lo and behold, as soon as I snap my finger off, what do I realize? Prices come back to 618. So if we believe in our fibs and we believe in our filters, and because we're using fractal analysis, we're comfortable with these red candles on this time frame because our filter is telling us that we're good. We're trading on the north side, so we should only be long. If you, you know, it's pretty obvious that that was the top. I can't really argue with it. But that being the top, you're instantly thinking as the trader who uses fibs that you should be looking for 618. Fibs, fractals, filters. The fractals, this is just an opportunity on a different time frame. It's just a fractal perspective. There's your swing high, and there's your 618. So basically what I'm saying is if you identify that as the top, you would have every right to be short to 618. In this case, it literally just wicks it. That's what kind of trading is all about, right? When do you go long? Well, here's our signal. This was telling us that they could no longer hide their infatuation with silver, right? We get a signal like this. So here you have everybody trying to quietly get in, which is what they do. But they can't hide it anymore, right? And the exuberance, the momentum, the excitement, the strength, the relative strength doesn't leave. And price just continues to move higher. And then you get the big wick extension and then the pullback, obviously identifying that as a top. And again, just using some common stuff, you're short to 618. That's what you believe in. And yeah, you're going to have a stop in here and all that stuff to mitigate the risk. Done. That's what trading is. Does every trade turn out like that? No, of course not. But some do. And the next thing that you really have to find a way to, somehow you have to embrace being indifferent to price. I think that's a huge challenge for a lot of people. Becoming indifferent to price. Not caring about whether a price goes up or a price goes down. The only time I care about price is if I'm on the wrong side of the trade. I hate to say it. Right? That's what matters. This is your weekly gold chart. Massive run up, not much different than silver. And what's really going on? Well, we just had a pullback to the 20. Now, we've showed this on Bitcoin. We have 1 minute, 5 minute charts, hourly charts, 4 hour charts. We've showed it on every asset that we look at all the time. So here we have This big move up, this is a nice bounce off the 20, right? Doesn't even break trend, just sideways, but doesn't break trend. Look where you're sitting. Essentially on the 20. That's what we can expect when you're trading above all support. And what does that look like? It looks like this. There's the 20, there's the 50, there's the 100, there's the 200. You should not be surprised that you found the 20. Because that's where it's going, right? You're trading above all this stuff. There comes a time when you're going to tag a level. Well, there you just did. The question now is, where do we go from here? We have three choices: up, down, or sideways. Now, if we bounce at this level, then we're starting to talk about whether we're creating a double top, and we've seen this before on the indexes a million times, or, because when you get a candle that closes up here, that's what you're going to hear, right? Oh, it's a double top, a double top, a double top. Are you sure? Because quite often what you end up with is, price finding its way up here, everyone thinking that it's a double top, but all that's really happened is price has moved on, taken out the previous wave's high, and then created another extension. So, if we see this before we go screaming double top, double top, double top, you really have to wait to see how it plays out, because it might not turn out to what you think at all. It just might continue on and continue to extend. All right, so don't get too worried about pullbacks to levels that you should expect to be clean, because you might just get a bounce. Right? That's what happened here. Right? Does that candle look similar to the one that we're dealing with today? Yeah. But that's what we ended up the following week. And the beat went on. So, patience and applying what you see on your chart to the rules that we use. Now, have we pulled back to the 20? That was an expected level? Yes. Would you instinctively think that might want to go short down to that level? Yes, and it would have been a decent trade. The next question is, where do we go from here? If we chatter and go sideways, well, that's a possibility. But if we break, what do we know? We know we're going to be looking for the next level down. Break one level, find the next. And do these things feel painful? Sure. But, should we kind of check ourselves because of a run like this? Probably. This is what happens in the retracements after these parabolic type moves. And it doesn't matter what the asset is. It's going to do the same thing. And that's where we are with gold. And, you look at the shorter the time frame, you can see that everything is fractal. On the daily, broke the 20, broke the 50, and here you are, breaking one level, and you found the next level. You found the 100. Are we kind of extended to the downside a little, quite a bit? Yes. Would you expect to try and test the T-line or the 5 EMA again? Yeah, probably. But, this naked wick down here, along with this one here, that's going to be a draw for price. And this is not the first touch of the 100 MA. So we're kind of increasing the probabilities, the more you hit it, that you could fail. So, get temporary support, sure. Maybe a little snapback, but eventually you might come back here again and do this all over again. Now, when we talked about this is NAS 100, so it kind of replicates the cues. When you start talking, when prices are, here we are at 26.1 way up top there. When you say the 200 MA at 24, they think you've lost your mind. I get it. Sounds like a lot. But price doesn't care how much the sound of stuff shocks you. Nor will it hand you a tissue or a towel to wipe your tears with. It's not going to happen. What we know is when you have all of this stuff twisting and been trading on the north side of it, as you know, with it being support, at some point in time, you are going to come and start checking these levels. And the ones that, when they're twisting together like this, the breakdowns happen fast. Right? If you look at the weekly, it's going to look cleaner. A lot cleaner. Why did we drop this level on here? We dropped this level on here for the same reason we dropped one on the Dow. It's structural. Here's our weekly sell signal. I'm sure our daily is somewhere in around the same spot. Is all I know, because I don't listen to all this other nonsense, is that the market's told you to sell. I am not smarter than the square root of this entire market. I am going to listen to it. The price, the market, the language. I'm going to listen to that. I'm not going to listen to somebody who thinks they might know something about the universe. As interesting as it may be, and as right as they may be. But nobody cares about the pontification. We only care about price. And we can sit here and say, oh my God, nobody saw this coming. It happened so fast. No, it didn't. It didn't happen fast at all, dude. It happened right before your very eyes. Slowly at first, then really, really, really fast. As Mark Twain wrote. 4-hour, daily, weekly sell signal. It's like getting punched in the face 3 times. And then still denying that you were punched in the face. And while you were getting punched in the face, all of this stuff was happening, just like you could anticipate. If you just took the time to stop looking at the stuff that's not important, those tiny time frames that are completely irrelevant, on your longer trades. Y'all tell me you want runners. Oh, I want that one that does this. Okay, great. Well, then stop screwing around on the 5-minute, because you're going to have to leverage the crap out of yourself in order to make your dreams come true. And it'll probably turn into a nightmare that you won't wake up from, because you won't change your habits and you're training yourself in the bad ones. And I'm showing you a 4-hour, a daily, and a weekly because this kind of suits the style of trading that I enjoy. And it works for me. But if you're going to trade shorter time frames, I don't know, I'm going to make them up, the 15-minute, the hourly, and the 4-hour. You have no business on the 5-minute, or the 1-minute, or the 3-minute. Stay structured so that you can understand what you're looking at on the chart. And you don't get lost in the thick of thin things. Right? You took a 4-hour sell signal, but on the daily chart, that sell signal stuck. And then lo and behold, you got one that fired on the daily. Now, if you washed your trade here, I don't think you'd be stopped out or anything, but if you washed your trade here or here, that's on you. Because you're not trusting the chart even when the elasticity is bouncing around all over the place. The chart is the thing that is actually separating the noise from the necessary. That's what it does. And I think our system does it really, really well. And when you layer them on top of each other, they quite clear. They give you that reassurance and confluence and validation that you're on the right side. But is all you're focused on this time frame is that I'm only looking at 4-hour daily and weekly charts. I took my signal here. Because I feel like I'm in the driver's seat, I want to steer this ship. And hey, even with this, didn't knock me out of my trade. Boom, sell signal, and then the bottom falls out. Even on a little test here. And if you did get stopped out, you would know, because of how this chart reads, that you're completely okay to go short again. And you stay short until it invalidates. But right now it has not. Again, and I just want you to do the little things right. The little things are so important. Now we're looking at oil, and this is a chart that we've looked at forever and a day. And, you know, when it broke out for the things that we understand, price went nuts, as you can see. And with all of the drama in in the oil market, in all of the geopolitical drama, this is your most valid signal, this buy signal. And, you know, it didn't really get exciting until the gap up, and then it started moving like in a parabolic way. But is this still a bullish chart, even with all of this drama? Yes, the chart is still bullish. Divergence up and to the right, active, still under an active buy signal. Now, just like we showed on some of those other charts, you're trading above 20, 50, like all of your support. Right now, we've talked about how the horse doesn't like to be too far away from the barn. Well, the barn is represented in a couple ways. One is price can get extended up over the 5 and the T line and kind of creates a knuckle, or that bit of an air gap that we see in price. And then secondly is the 20, right? The 20 is kind of the ground mechanism in a sense. And whether you use the 21 EMA, it's irrelevant. It's all doing the same. Right? It's kind of that ground of price. And when price gets too far away from it, when the horse gets too far away from the barn, what does it do? It comes back. And sometimes it comes back running. Right? That's why when you get extended like this, eventually when the thing gasses out, it gasses out. And what would be an example of that? Let's look at this thing, right? Parabolic, and then gasses out, right? Remember over here when we started to break down, in all likelihood price was going to come back to the this base back in here, and that's exactly what it did. And you broke one level, you found the next level. This is a flush candle, right? But obviously a rejection. But how did you know that your short was good? Because of this, right? Open, down, and to the right. All of this stuff is just drama. Just drama. There's no reason to be long when you're trading below these levels. There's none. Zero. So the takeaway is to stop the bad habits. Stop doing the things that don't work, because whether you realize it or not, you are literally building muscle memory of bad habits. And we don't want you to do that, because the good habits are so easy to attain and so easy to learn. Right now, do we expect everybody to learn it in one big candle? No, of course not. Right? Not going to learn it in one session. But you're going to learn it, and you're going to enjoy it, and you're going to make money doing it. This is Walmart, and I want to take a look at this chart because it's a chart I've been talking about in some of my other groups that I'm in, because here's your 4-hour sell signal. And you are trading well above all of these levels. It's another one of these charts that's kind of gone parabolic, right? So at some point in time, you had to come back and check the 20. Hey, and you got a little bit of a bounce, and what did you do? Instead of creating a double top like we talked earlier, you actually took out the previous wave's high. Hey, a little bit of a retracement, get some support at the 20, and boom, take out the previous wave's high, and then you get really extended. Sell signal on the 4-hour chart. This is the daily, which is actually today's candle, or yesterday's candle. So we're getting that confluence again. And I'm just, this could be any asset. I'm showing you Walmart, which is, by any argument, a very well-run business, right? They're good at what they do. But what's happening to their stock is purely technical. Again, this is a language. The market's telling us what it's thinking. And we just have to try and frame it up and put it into context. And we do that by not running around the entire time frame sphere. Because sooner or later, you'll convince yourself of something you want to convince yourself of. Here's your weekly chart. So we haven't printed a sell signal as of yet on the weekly chart. But just like the Dow that we showed before, here's your 4-hour entry. Here's your daily entry short. We're just waiting to see if this thing continues to give us the confluence that we're hoping it does if you're short. What is price looking for? It's looking for the 20, right? The horse, this is that kind of extension, right? The horse is looking to come back to the barn. That's the 20 MA. And when it gets there, it might gas up and take off again. Or it might decide it wants to hang around. And if it fails the 20, and again, it's hit it several times on the weekly, so you increase the probability of failure each and every time. This time, however, if you fail the 20, you fail it into a volume gap to the downside, with the 50 MA, the ice, waiting for you kind of just on this shelf area and just slightly below the point of control. So if current price revisits past and you don't hold the 20, you come back, puts the 50 in play, just like on every other chart on every other time frame. Extension up, came back to the 20, failed, trying to break it, right? Can't fail. What do? Right back to the 50. Fail again. This time, this is the failed breakout, right? Take out the previous wave's lows, and in order to get there, what do you have to do? Fail the 50. That's bad. Price came right back to the point of control on the daily, and this is still a very bearish chart. Right now, this level below is in play because you failed the previous. And if you come back here and fail again, big volume gap to the downside, and lo and behold, what's this? The 200 MA. Is it unusual on a daily chart to come back to the 200 MA? Of course not. And that's currently at $108. Now, time and price have to come together, so I wouldn't anticipate it's here, but somewhere in this volume gap on the daily, we will find that happen, assuming that you don't get a reversal here. But when we look at the weekly, because that's our other time frame, actually, before I do that, what is this? 108, that's right. What's 108 on the weekly? Oh, look, basically the 50. Right in here. So that means on the daily, you fall into this gap, right? Because this is 108, this is the 200. So if we continue to drop, this will be a real nice test, right? If we continue to drop, break here into the gap to find the 200, which is not an unreasonable thing by any stretch of the imagination, that 108 level puts us just in and around the 50, right here, on the weekly, which is also a completely appropriate level for price to find. And when it does it mean the sky's falling? Well, it didn't back here, right? You pulled back at the 50 and bounced. So if you do get back here, is it going to be the first touch? No, it's not. So you have that increased probability that it might not hold. So this really gets interesting. And I think, we've had roughly 15 years of parabolic price movement for the most part, right? Where we've had, what is this in a sense? Let me go to a longer time frame because it'll show you. Let's go back to 2008, 2009 when QE started, right? So picture this as the balloon valve. And then you have the Fed that starts pumping fairy dust and air into the economy. And when that fairy dust and air hits the consumer, this is what happens. Certainly what happened to the stock price, right? Everybody's buying everything because they can. Now, all that did, that fairy dust and air, is blow this balloon up. And now they're standing there trying to figure out and balance how much fairy dust and air they got to continue to blow into this thing while it's trying to figure out what to do with the hole at the other end. It's a real magic trick. But now this is what happens when you pump all that money into the economy, in my opinion, right? So blew it all up, and now the language of the market's going to take over. Just like it took over on the way up, telling you, hey, I'm on the north side of the T-line and the 5 EMA on this monthly chart. I guess I have nothing to worry about. Oh, there's a red candle. Yeah, so what? Boom. Diverged up and to the right. You were fine. It's doing anything magical here. But now that we've blown up all this, blown these markets up, at some point in time, becomes unsustainable. Right? And that's the dilemma. How do you keep pushing price up? At some point in time, something's going to give. And you're going to come back on this chart and you're going to check the 20. Because everything is fractal and we live in a fractal world. But I think that, the most current is, how does the weekly candle deal with the 20 MA? And if it fails, it puts the 50 MA in play, which means that on that 108 level, again, is in here. Look. So I think all of this, because the 20's in here, so I think all of that's in play on this thing. But it's, look for the 200 on the daily and weekly charts. And don't freak out when price finds it. And, whoops, wrong way. I think we just take another look at Bitcoin really quick. This is still a very, very, very bearish chart, right? We see this all the time. So look for, if this continues, to take out the previous wave's lows. Basically come back to the point of control. And the point of control in that 200 MA, or when there's a downtrend, it's like a magnet for price. When it's an uptrend, same thing, but in the opposite direction. So really, what do we need you to do? We need you just to stop doing all the stuff that doesn't work. Stop creating muscle memory of failure, because that's literally what you're doing. Stop that. It's not in your best interest. Whether it's this way or another way, find a way that works. And stop continuing to make the same mistakes in an effort to do better. Like if you're losing in an effort to do better, you do yourself a favor by doing nothing at all, because at least you wouldn't be losing anything. And I know it sounds conflicting, but you have to get yourself in a position where you're making good decisions. And remember, this 4-hour Bitcoin chart, right? Like, it gave us all kinds of opportunity to trade these waves successfully with more than reasonable return. And it's structured, and it gets you in the good habit of doing the right things without thinking about it. You know, when you take this sell signal, that you are, as this chart unfolds, going to fail these levels because of what you see. That divergence approaching those major moving averages. When it's open like that, it's not going to hold. You knew that. And then when you overlay the trade management component, and again, you have total control over those levels, but just using the example that we had at 20 times, you hit 30, 60, and 100% profit. And you could have averaged out like 33 out, 33 out, 33 out, and be done without even thinking about it. Those are the good habits, right? And those are the habits that are successful in every market. People will tell you can make money in both markets, up and down. It's true. But you have to be disciplined, not reactive. And you have to be focused and strategic, and then execute your plan. If you enter on a 4-hour chart, you have no business looking at the 5-minute or 15-minute. Not even for entertainment purposes, because it messes with your head. Do the little things right, and you'll be fine. You really will. There are things that you can use, tools just like this, that are designed to trade, not designed to give points of view or perspectives. They're designed to help you trade successfully on any time frame with any asset. And it's pretty simple. It's not that hard. There are systems that are incredibly difficult to learn. This is not one of them. And it gets you on the right side of the trade at the right time so that you're in the driver's seat and you don't have to deal with the stress of trying to figure out what to do because you had a bad entry. All right, so take the time to think about all the stuff that creates you angst and makes you second guess yourself and ultimately kills your confidence. Right? Without strong confidence when doing this, it's really hard. And it's hard to get confident when you repeatedly make the same mistakes and you know you're doing it, right? I'm not trying to, point fingers or make anyone feel uncomfortable. We all know when we do it, right? But you have to have the discipline to say no more. I'm not going to do this to myself anymore. I'm going to build myself to win, not train myself to lose. And you're going to possess all of that knowledge that no one can take away from you. And you're going to monetize it for the rest of your life. But it won't work if you keep doing the little things wrong. Do little things right and it will. So on that note, I hope everybody enjoys their weekend. Thanks for joining. If you have an opportunity, certainly like and subscribe to this YouTube channel and follow us on X at BluntHouseTA. And feel free to join our Telegram group. It is absolutely free. And we talk about this kind of stuff each and every day. And there are people that have been in there for years. And when we first met them, they couldn't even tell the difference. They only knew that the red candles were bad and the green ones were good. And the thought of selling short would have made them poop their pants. But you know what? Some of them now only want to sell short because they know how to monetize the chart. And they found a way that works for them. And that's okay, and you can do it too. So thanks for joining us, and we will see you